How does the stock market works? The stock market works as a marketplace where the investors buy and sell ownership shares of public companies with prices determined by supply and demand. Companies first sell shares to the public in the primary market through an initial public offering, that is IPO, to raise capital, and then those existing shares are traded among investors in the secondary market. Transactions are executed through a stockbroker who uses a trading account to connect to a stock exchange, which facilitates the matching of buyers and sellers and provides the infrastructure for trading. Now, let's discuss how it works primary versus secondary market. First, the primary market. This is where the companies sell new shares to the public for the first time via an IPO to raise money. Now, the secondary market. This is where investors buy and sell shares from each other, with the company not directly involved in the transaction. Supply and demand. Share prices are driven by supply and demand. If more people want to buy a stock than sell it, the prices goes up. If more want to sell than buy, then prices goes down. Role of stock exchanges. Stock exchanges act as the central marketplace where the buyers and sellers meet to trade securities. Now let's discuss about the role of brokers. How the brokers maintain the stock exchange or the stock market. You need a licensed broker to access the stock market. The broker helps you open a trading account and a demat account to hold your shares electronically. Your broker executes your buy or sell orders or the stock exchange on your behalf. Now, let's place an order. How to place an order? You tell your broker the company, the number of shares, and the price you want to pay or sell for. The exchange then looks for a matching buy or sell order at the specified price. Once a match is found, the trade is executed and the money and shares are exchanged. Now let's discuss how will we get the profit. Profiting from the stocks. First one, capital appreciation. You can make a profit if the share prices increases after you buy it and you sell it for a higher price. Now, the dividends. Some companies share a portion of their profits with shareholders through regular dividend payments. Now, the common question arises. How does the stock market work for beginners? Stocks represent shares of ownership in a company and are listed for sale on a specific exchange. Exchanges track the supply and demand and directly related the price of each stock. They also bring buyers and sellers together and act as a market for the shares of those companies. Now, the next question arises. How many stocks is one share? One stock refers to a company, while shares are its divisible ownership units. There is no fixed ratio like one stock equal to 100 shares. So, I think you got the idea. Now, one of the common question. How to earn rupees 1000 per day in share market? This is a regular question and the answer is earning 1000 per day from the stock market through multiple trades with a small profits requires a disciplined approach. Focus on intraday trading in highly liquid stocks or indices like Nifty and Bank Nifty where the price movements are frequent. Now, the famous and the biggest rule in trading, the 357 rule in trading. The 357 rule is a risk management strategy for trading that recommends never risking more than 3% of your capital on a single trade, keeping your total exposure to all open trades under 5% and aiming for a minimum reward of 7% profit on winning trades. This framework helps traders limit potential losses, avoid over leveraging, and promote a risk reward edge for a long term success. So, I think you got the idea of 357 rule. Now, hello beginners. Who is the number one share market in India? Can you answer this question? The top 4 or 5 members or the companies are Reliance, HDFC, Bharti Airtel, and TCS. So, if you want more details, please subscribe this channel and please touch the bell icon. Thank you.